what we'll be doing is that we'll review some of the strategies one after the other. And the guys presently in the fostering program, the mentorship program, we held a meeting on Saturday, and I mentioned to some of them that from the feedbacks I got from the way they handle the market, many of them are not fit yet to trade the market directly for obvious reasons. And we suggested that some of them should consider trading algorithmically. That is the use of robots. And I shared some of the robots I use personally, and some I'm planning to use, and some the Simply Peace family is also working on. So we will be sharing during this program, this 2 weeks or thereabout meeting, we would be sharing some of the algorithms we trade with, and the strong points and the weak points, and perhaps why some of you might want to also trade algorithmically. I want to put it straightforward before we move into discussion for today, that not everybody is wired to become a discretionary trader. Discretionary meaning that you look at the charts and by your discretion, you decide whether you should go in or not. Some people are wired to be algorithmic traders. They trade by setting fixed rules, and then those fixed rules can then be acted upon an algorithm, which we'll call an EA, an expert advisor. And then that expert advisor then trades on the behalf of the people. We would expose you guys to some expert advisors. We expose you guys to some semi-EAs that are indicators. Some are in-house, some are not owned by us, but we use them. We would expose you guys to some of these things, so you better understand and you make your decision as to whether you want to trade with them or not. So let's move on. Today will be very brief. Like I mentioned, I'm not had to come condole with somebody who lost a loved one, so I'll make this very snappy. During the last strategy splash we had, we looked at high probability, low risks, and at a particular setup called the weekly setup, right? The weekly setup. So I'll be discussing again the weekly setup, and we'll look at how it performed in the last maybe 1 or 2 weeks, and see if there are possibility for us to even find setups for today, and then we will take them. Have in mind, if you are trading, you should be following fundamentals. Have in mind that the US are having their midterm elections. I expect some volatility in the market, depending on the outcome of certain things. So again, what are weekly trades? Let's say we're in a downtrend. In a downtrend, we expect price to do something like this. That's what we expect in the downtrend. In a weekly trade, we anticipate that if the trend is bearish, within the week, price will, sorry, please, let her not fly around. Within the week, price will most likely move in the direction of the trend in more pips than it will do against the trend. So let's say we are in a downtrend. If we're in a downtrend, I'm going to use these blue lines to delineate 1 week. So if this is week 1, week 2, and week 3, in a downtrend, we are not saying price will not buy. We are saying that there is higher possibility that if you calculate the number of pips by which price moves to the upside, that the downside will surpass that. And that's why it's a downtrend. So week 2, of course, price will go up or may go up. But if you look at the number of pips with which it to come down, it will be more than the number of pips for which it is going up, right? And so on and so forth. The reverse is true for an uptrend, right? The reverse is true for an uptrend. So in a downtrend, we expect more downwards movement. The question, looking at the schematic drawing we have here, if this is the scenario for week 1, then our point of entry for a sale should be somewhere in that purple region. And this purple region should be technically the highest point in the week, which we call the high of the week. You go down to week 2, we would love to sell from somewhere within this region. We are not too sure, so we are not using a line, we are using a region. Within that region, there should be a point, something that will hit that we should sell. That is also the high of the week, and like that. The reverse is true for an uptrend, right? For an uptrend, you have something like this. So you are planning to buy from this low point, which will be the low of the week. That is where you are planning to pull your trigger from, right? The big question is now, how do I know that a particular point in price could be the high or low of the week? That is $1 million question, because I could have assumed that point 1 here is the low of the week, the price goes even much lower. I could assume point 2 is the low of the week and price will go even much lower until it gets to point 3. How will I even know that point 3 itself is the low of the week? Because price will even go much lower before buying, if at all it buys, or price will just continue to go lower, and then, you know, the trend changes from a bullish trend to a bearish trend. A price doesn't continue in an uptrend ad infinitum. Neither does it do likewise for a downtrend. At some point, it's going to change, right? So the major reason that we cannot, out of certainty, say what the lowest point or the highest point of the week is, brings us to one key thing about the strategies we trade in the Simply Tips family. We accept losses. We don't try to avoid them completely. In the like one instructor said, if you avoid small losses, you take the mother of all losses. So we use stop losses and we accept our losses, or we use variations of stop losses. So since I'm not sure, does that mean I should just go into the trade anytime and assume this is going to be the low point? No. We have fixed things we want to look at to determine whether a point is the low of the week or high of the week. There are fixed things to add to determine that. So we're going to discuss them briefly and then we'll chat and look at them again. So what are the fixed things? Let's say we're in a downtrend. We want to assume that for a point to be the low of the week, it must at least have taken out the previous days. Oh, sorry, for a point to be the high of the week, it must have at least have taken out the previous day. So let's say this is Monday's trend upwards. This is Tuesday's trend upward, right? And we are in a downtrend. We are actually in a downtrend. But Monday, price moved to the upside. And Tuesday, price moved even further to the upside. I will assume that this high is the high of the week only if it takes out Monday's high, right? If price trades, let me use a different color here. If this is Tuesday and it hasn't taken out Monday's high, then this high can definitely not be the high of the week. For it to be the high of the week, it should technically take out the previous day's high. So what are the things we want to look out for? Number one, it has to take out the previous day's high for it to be the high of the week. That is very, very key. It must take out the previous day's high and for it to be the high of the week, right? The second thing we want to look out for, to assume that we've gotten to the high of the week, is for us to get certain candlestick patterns that shows us that price, after forming the high of the week, is intending to begin to sell. And there are many ways. We'll discuss only one of them today, again, because I want this meeting to just be like 20-25 minutes. We'll continue tomorrow. So what do we want to look out for? We want to look for candlestick patterns that shows us that it is time for us to begin to sell. And there are quite a number of them. The first one being a bearish engulfing candle. I want to say a bearish engulfing candle, right? I might want to see a bearish inside bar, a bearish inside bar that has been confirmed, right? I'll explain all of that perhaps too. And the third, I might want to see a doji that has been confirmed to be bearish, right? A doji that is confirmed to be bearish. These are candlestick patterns you want to look at to determine if you want to sell or not, right? So in conclusion of the theory, what are the things we want to look out for? Number one, we want to be able to identify the trend as either bearish or bullish. So here we have a bearish. We have to look for something that will tell us that we're in a bearish trend, right? So let's come back to the chart. So on my chart, I have a simple indicator, right? We'll call it the value. This indicator prints either green or red. That is all, right? It prints either green or red. When we look at it, if it's red, we assume we're in a bearish trend. And if it is green, we assume we're in a bullish trend. There are many ways to determine whether something is bullish or bearish. You could use price action for where you look for other blogs and the likes. For this discussion, I want us to just use something simple, right? I just come to the chart, and if it is red, I'm bearish. I don't want to do analysis, right? So here we can see that we are bearish on GU. If I go to AUD/USD, we are bearish. Euro/USD, we are bullish. NZD/USD, we are bullish, right? Those are the type of things we want to look out for. It's very simple way of knowing if I'm bullish. Now remember, I am doing this on a daily time frame. You could do this on H4. There are other combinations you could look out for. You could do it on H4, H1. You could even do it on weekly. For this discussion, I'll be focusing on the daily. And because of our time, I want to focus on just last week. I will come back tomorrow again and look at it again. So let's look at just last week, right? So as at last week, let's start with GBP/USD. Last week, GBP/USD was still bearish. So what do? I go to my chart on GBP/USD. It's bearish, and I'm starting from Monday. This is Monday. For me to be bearish, for me to sell, certain things must happen. Number one, I must identify the high of the week. And what do I need to know that the high of the week or potential high of the week has been formed? I need to wait to see that the high of Monday, which is this day here, has gone above the previous day's high. Right? On my chart, I have an indicator that tells me the previous day's high. So notice this is Tuesday. The highest point of Tuesday happened to be this here. You will notice that that highest point was superimposed into the next day, right? So I can see from today, I can see the highest point of yesterday. So let's look at GU. This is GU. Did it take out the previous day's high? No. So this cannot be high of the week. And if you look at it throughout, it never came back to form the high of the week. So it simply means on GU, based on this strategy, we wouldn't have had a trade last week. Based on our other strategies like the HPLR with Asia session, there would have been a trade here, right? And we would have sold all the way down. But there was no trade on this day. Again, you can't catch everything. You have to trade based on a fixed strategy. This strategy, no trade. Let's go to the next pair. The next pair we'll look at is AUD/USD. AUD/USD is bearish or was bearish as at last week. So what do? We come here on 30 minutes time frame and we go to look at, did we form high of the week? This is AUD USD. Where are you? AUD USD, not here. Let me call it up. All right, so we have AUD USD here. We look at the high of the week. On Monday didn't take out, this Monday, it didn't take out Friday's high, right? It didn't come up to these points. But what happened on Tuesday? Tuesday took out Monday's high, right? So we could assume that it is the high of the week. An assumption. So we want to wait for price to take out this point and give us a bearish engulfing candle pattern, right? That was the Asia high. So price came, took it out on this candle, but never closed below. It didn't give us a bearish engulfing candle. Price came back here again, took out that high, but never gave us a bearish engulfing candle. Then this is an inside bar. See that that's the highest bullish candle. Price closed beneath it. That is our sell signal, right? That's our sell signal to go in. If you trade using limits, price will never have picked you up that day. Price will not pick you up that day because price closed beneath and then just continue. We use limits most of the time. I will introduce another entry technique tomorrow, which is moving average. The close below the true moving average. For some of you that might just be and I might just prefer that. But again, up here. Can you see what happened on Wednesday? Wednesday created a new high. It took out the Tuesday's high, right, for us. But there's a big problem with that. The stop loss is too wide. We don't want our stop loss to be at maximum more than 40, 50 pips. The stop loss is 81 pips. So practically we not have a trade throughout the week, right, for AUD/USD. Even though price went in our direction. Let's go to the next day. The next pair, we have Euro/USD. Euro/USD for last week was bullish. What do we need to do? We need to look for the low. So I come here and I click on Euro/USD. This Euro/USD, I'm looking for the low of the week, starting from last week, Monday. So this is Monday. And you can see Monday, which Monday, yeah, this Monday here. Monday took out the previous day's low, right? Inside, I didn't recognize. Monday, sorry, please. I told you I'm somewhere, so it's Monday 20. Monday 21st. Monday 31st. So here is Monday 31st. You can see it took out the previous day, right? A buy signal. We would have taken that buy signal and lost. We accept our loss. It's part of the business. We accept our loss for that day. Never gave us another entry within. So that is all. We come back on Tuesday. It took out the previous day's low again. But the signal came up. This is the signal came after our kill zone. This is the lowest bearish candle and price broke above it. It came outside our kill zone. We want it to happen within this red or blue area. So we are not in this trade again. Very simple. The next day, it took out the low, but also happened outside our kill zone. We are also not interested in that day, right? It's not trade. It's how much you make when you trade. Now look at the next day on Friday. Friday, finally, it took out the low, giving us the low of the week again, right? Here is our lowest bearish candle. This is the close above. Can you see the close above there? And that is our trade. So now we'll be taking our trade from that point. Right, we'll be taking our trade from that point. Simple. Right, it came, gave us TP1, TP2, TP3, TP4, TP5, TP6. Right, so Was it worth it waiting until Thursday? Remember, we lost one trade here. Remember, we lost one trade. So let's say you're risking 1%. You've lost 1%. And here you had the potential of making 6%. You are practically done for the week. Risking 0.5%, you lost 0.5%, and here you made 3%. You're done for the week. I mean, you're done, right? So let's look at another pair again. We've looked at GU, we've looked at AU, EU. Let's look at NZD-USD. So here we have NZD-USD. Again, NZD-USD last week up till this week is bullish. It's bullish. Our value line is green. So what do? We go down again to NZD-USD. Let me call that up here. NZD-USD. Boom. Right. I'm aware some of you like trading every day. No problem. We will consider about 5 or 6 strategies during this period. We'll also show you some of the EAs we use, EAs owned by us, EAs owned by other people that we use in trading. But for now, let's proceed. So this NZD-USD, we are looking for the lowest point in the week. And I told you the rationale behind the lowest point in the week. So here on Monday, it took out the previous day's low. What happened at the time, we're not interested, right? Outside our kill zone. And even though it happened, see the way price moved. We're not interested. It didn't happen during our time. So this point here becomes the lowest point so far. This is Monday's low. Tuesday didn't take out Monday's low. Now, here is a scenario some people ask. What if Wednesday took out Tuesday's low, but didn't take out Monday's low? Would we take the trade? The answer is no. Because if Wednesday takes out Tuesday's low, but hasn't taken out Monday's low still remains the low of the week. If we want to buy it, it has to be the low of the week. So price coming back on Thursday, right? Price coming back on Thursday, giving us our candlestick pattern, and we have our limits set up here. And that was peaked sometime in Asia. So we have our trade stop loss below. So again, it picked us TP1, TP2, TP3, TP4, TP5. Again, is this a good trade? Is it worth it waiting till Thursday before taking your trade? The answer is yes, right? By tomorrow, I'll tell us what we call, there's a term we call, right? With this strategy, you can spend 4 hours per week trading. In fact, less than 4 hours per week. Because you set an alert. I don't want to go into it because that will take me beyond the number of minutes I want to spend today. But you can set alerts, and until the alert is triggered, you are not coming to your laptop. So you can practically spend 2 hours a week trading. And if it's a positive week, so be it. And if it's a negative week, so be it. But from my experience and from my trading journal, I have had more weeks of profits than losses. And I've had more months of profits than losses, trading just less than 2 hours a week. If you prefer to sit there in front of your chart all day, we have other strategies that might suit you. Let's look at one more pair and then call it a wrap for today. So we've looked at GU, AU, EU, NU. Have I missed any of the USD pairs? Have I missed any of the USD pairs?
Yeah, UN, CHF.
USD.
Swiss franc.
Swiss franc. Oh, for one reason or the other, I just don't like the Swiss franc. But let's look at it, no problem. We'll look at the Swiss franc and then we'll look at Bitcoin and then call it a wrap. It has been bullish, guys. It has been bullish. So what do? We come to USD, UF again, and then we check. Presently, this is Monday. So Monday did take out Friday's low. It can't be the low of the week. What happened to Tuesday? Tuesday took out this low. So for this week, Tuesday could be the low of the week. That is first here. And this is it. This is your bullish engulfing candle. This candle closed below this. You simply enter this trade as at that point, and this gave you up till TP8, right? TP8 gave you that. It even came back to give another entry on Wednesday, right? But that was outside our kill zone, so we'll not be bothered. But you see, we had just one trade, and it practically went our way, giving us up to TP7 at the least, right? So let's look at one more and then call it a wrap. I need to. So this is Bitcoin. Bitcoin was also bullish last week, right? It was also bullish last week. So what do? We come here and look at Bitcoin. I prefer doing cryptocurrencies on 1 hour time frame, right? I prefer doing cryptocurrencies on 1 hour time frame. So if you are wondering why we don't notice a lot of noise in the group, it's because some trade only 1 or 2 trades in the whole week. You don't have to sit down in front of you and making noise from morning till night before everybody knows you're a trader, right? So here we are on Monday. Remember, we are bullish, right? So Bitcoin, BTC, here we have BTC. So yeah, this is Monday. So Monday took out the previous day's low and gave us that point here. But again, that happened during outside our kill zone. This is the lowest bearish candle. This long one is the lowest bearish candle. Price needed to come and close above it for us to buy. 2 things will stop us here. Number 1, this range is too wide. Because you're basically saying this is going to be your stop loss. That's too wide. But if you must take it, I gave us RCE. But even at that, RCE too is too wide. This is a news-related candle. I don't want to be taking that. So we have Tuesday. Tuesday didn't take out Monday's low, so it can't be the low of the week. Wednesday took out Tuesday's low and also took out Monday's low. This definitely will be the low of the week, but it was happening at the end of the day. That is outside my kill zone. But what happened on Thursday? Thursday took out everything and became the lowest point in the week. And that is my entry signal here. So I get into this trade. Boom. And I have my TP4 about done and dusted. So ladies and gentlemen, please permit me to end this discussion. I should be home tomorrow around this time, and we can have a more robust discussion. We can have a more robust thing. I'll do that, please. Came here, respect this time, and then we'll meet again tomorrow. Prof and Taiwo, thanks for coming around. Let's meet again tomorrow, 2 p.m. We'll look at this again, and I'll give you some other entry techniques that we can use, and we'll also talk about the workability. From tomorrow, we'll start showing you guys some of the EAs we use in trading that some of you might be interested in. Let's have a wonderful day, guys. Bye-bye.